Hey, what's going on, y'all? This is the midweek review for May the 6th, Wednesday, 2026. Had a crazy week so far. We're gonna go ahead and take a look at the charts here really quick now. Um, let's go ahead and get this screen shared. All right, and let me get this music pause. Okay, okay. Let's go ahead and share screen two. And actually, let's switch here. Let's go screen three. Okay. How is everybody doing? We've had a pretty crazy little week so far. With the news this week, let's go ahead and set this here. Okay. So far we already had a couple of news releases. We had new home sales, we had ISM PMI, Jolt's job number, and new home sales. So far, those numbers have beat. We had new home sales data for February beat. We had ISM numbers. They came in on par. And then we had Jolt's jobs numbers. We had a slight beat on that. And then we had the new home sales for the newly released data that beat as well. Then we had ADP farm roll changes, which came in under, but pretty much in line, just like about 9,000 jobs off. Then the big news was the headline news. We had stocks surging today because of the news regarding Trump saying that he believes that Iran will be coming into closing the deal for permanent ceasefire. That was kind of the kickoff for the actual move for this move up. And that's really been kind of how we've had to play these charts this week. A lot of this movement is just one directional, which leads us to a point where we just kind of have to take the trades from a higher time frame perspective. Trying to use the lower time frames. It'll help to get you into the trade. But as far as like how long you stay in the trade, or if you're trading prop firm accounts, like it's kind of you may want to change some of your behavior as far as like how we look to make some of these trades that we're taking. Because if you're in a prop firm, you may want to like kind of size down a little bit, and if you're trying to get through a challenge, it's making you look at closing your trades a little earlier, and in the if you're like in a longer term account or a live account, you're taking these moves with the idea that once I get in these moves, it could be a longer lasting move. So I may want to scale down a little bit in order to be able to handle some of the drawdown because you kind of know the direction that we're trying to go right now. You just have to like withstand the momentum and how the prices are moving up and down right now. So you know, just kind of how you see what you're looking for and what trades you're trying to take and what accounts you're trying to use. I will let that kind of dictate the manner in which I take these trades. And it's been really hectic. You know, I got into trades for the first time in my prop firm account yesterday. Um, took some trades in my other accounts, and they're doing pretty good, but just not. Um, I didn't really see the value in chasing when it was kind of unclear as to how the market was going to play out in my prop firm account. So I didn't. take a lot of those trades that I normally would post about or talk about. I did take some trades, but just very, very small trades and some demo trades. Like I just couldn't get a good read on how the market wanted to play out a lot of these moves. So instead of like putting myself at risk, I just went ahead and, you know, took the opportunity um, and just sized down very small so that way I wasn't taking any unnecessary losses and putting my capital at risk when I didn't need to. So um, some dates I want you to put on your calendar. Um, and these are important dates because of like what geopolitical dates. Let me get my notes real quick. I got it on the calendar. It's gonna be next Thursday and Friday. President Trump is going to be meeting with President Xi of China, China's president, and then they're going to be basically talking about how that. Well, I don't know exactly everything they're going to be talking about, but one thing in particular is how U.S. and China are responding to the Iranian and U.S. and Israel war. So that's going to be a big thing to consider for next week. And again, that's 14th and 15th. That's going to be one we really need to take into consideration because of what's going on right at this moment as far as the geopolitical situation right now. In particular, the logic behind this particular date is just basically it's kind of how we get the response from China and the behavior we get from how Trump responds to the outcome of this meeting that they're going to have. We'll get a lot of the feels of what we need to consider for how the market kind of moves going forward. And then, for the rest of the week, we got unemployment claims, um, our oil inventories. They came back a little less, which again, this should be a red folder. I'm not sure why it isn't. Um, and then finally, we still got NFP to on Friday. We have the average earnings, NFP, unemployment rate, all coming out Friday. Consumer sentiment and preliminary inflation expectations coming out on Friday. So we still got some news that we need to consider for the rest of the week. So I would definitely take full advantage of how that plays out for this week. So keep those things in mind. And the other thing is, I know that I've been kind of quiet lately. I've been kind of quiet, just been really trying to assess this trading. Who else has found this trading week so far pretty interesting or pretty difficult? Anybody?
I did trade today. I took that MNQ.
Any other trades did you take this week so far?
Yes, so today I took that MNQ, and
Uh,
I think Monday I took something also.
yeah,
I
yeah.
don't remember.
Okay,
Yeah, I took on Monday also.
okay. Yeah, it's been weird, man. And honestly, this is for me, this has been
Mm.
probably the worst charts. Like this has been the worst trading
Yeah,
that
yeah,
I've
I think same
seen.
thing. Like for MNQ, right? I was waiting for to tap that in London FVG, and it did that. But exactly like little bit here and there, right?
Yeah,
So, but good thing was my stop loss was low, so I was okay. But yeah, because of that, I couldn't add or I couldn't. did with like five or six lot, right? I did just
Right.
with two only,
Right.
and I was just trailing my stop loss only. So yeah, but yeah, it was good, pretty good learning also. Like in this kind of situation, how should I be calm, patience, and wait for setup?
Yeah.
I
Yeah.
was doing for that MNQ also. I was sorry, MES1M. I was looking for that, but that time that didn't tap that London FAG. Then after that, I thought not to take that. But
Yeah.
same time I saw that SMT also. Like today, I took that not profit and loss, but today was good learning day for me. I was
Mhm.
just expecting that I was doing just narrative, right? This should happen, this should happen, it should go up, it should go down. So it was
Mhm.
happening like that. So it was pretty good for me.
Yeah. Yeah.
Mhm.
What about you, Trish? I think I kind of got the same feeling from you on this too.
Yeah. Yeah. Yeah, for sure. And I've only been like entering like one or two contracts. I haven't been going like three or anything. I was like, it's been a little too shaky. Not shaky, but it's just that, like you said, it's not you having to change up your normal strategy, but kind of
Yeah.
looking at other things. So like I've been looking at like breaking retest like
Mm-hmm.
uh yeah, like break and retest, looking at that.
Mm-hmm.
Um and then like for today, was it today or yesterday? Yesterday. I didn't trade
Mhm.
today. Or was it
Mm-hmm.
today? I can't remember. I'm getting my days mixed up.
Mm-hmm.
Yeah,
Mm-hmm.
it was
uh
today. You sent that message, right?
yeah, I think it's today. Wasn't it
Yeah, I
today?
forget
Oh
that
my
also.
god.
What I did
Okay.
yesterday, yesterday, what I did day before yesterday. I when I see my chart, then I'll know. Okay, I did this, but I forget that also.
Yeah. And so I had it is funny to like I was trying to use the quarter point to get my new my take profit where I was gonna
Uh-huh.
take it to. But it was funny how like it didn't even go all the way there. It was like
Right.
it like one pip, it would just
Yeah.
stall like actually a point 0.5 of a pip. So it was just
Right.
stalling.
Right. Yeah.
So I was like,
Today,
huh.
like it was one move only, right? One sided, because that was very high. Also, means I was not expecting that high.
Yeah.
Maybe
I
because of
wasn't
that
even
AMD.
yeah. I was but when I saw the break and retest and it never came back down to the fair value gap, I was like, oh, this gonna keep going.
Yeah.
Yeah. Yeah,
Yeah.
after 3 o'clock, right? Around 3 o'clock, I was looking for that if I get something like reverse, but again, it moved up.
Yeah, it's just been one directional. And
Yeah, wonder.
even trading the break and retest, it's like, uh, how does this play out? A lot of that news this morning came out at 4:50 a.m., I believe.
Mm-hmm.
Mm-hmm.
And,
Yep.
I just so happened to be in front of the computer at the time. And, it was just one of those things where it was just like, who would have known to look for this? You know, how
Right.
how would you have known to trade this? And even knowing how, hey, I should probably take this or not. You know, the way that the candles are moving, were like, it's really unclear, like how far it is going to drop down. Even on the
Yeah.
higher time frame, like, what were
Even in
you looking
pre-NY,
for as
it
far as
made that move.
structure? Was that?
Mm-hmm. In pre-NY, that made that move down. That was
Hmm.
also like pretty good move, right?
Yeah.
But mm-hmm, that was not the right time.
Yeah, yeah, it's been pretty interesting. It's been
Mhm. Like
pretty
as you
interesting.
said, this is like a something like now we need to learn how to trade this market with our strategy, right?
Yeah. And that's kind of like, stick to your strategy. If it
Yeah, exactly.
requires you to wait for this or wait for that and, consider this, just stick to your strategy. If it runs
Mhm.
without you, just take it as a note. Uh, Mark down what you're seeing. And that's kind of, all you can do when the market is just like doing crazy stuff. It's been a lot of traders that I've listen to, even the people on Top Step TV and stuff like that, and then a couple of other guys that I know and I trade talk trades to, they've been having the same week, you know. So
Mm,
it's not just us, man. It's not just how we trade. It's not just our style of trading. Even the break and retest people are, they're we're winning right now, but they're not because it's still hard to read, you know. Um,
mm,
so I wouldn't take this as a um, shot at yourself for missing this move like we have, but just this, this is new. These are new conditions. These are new things that are happening in the market, and the behavior of the market is responding in a very unfamiliar way, you know. So
right.
um, it's about patience right now, and the
Mm,
patience is the only thing we have on our advantage, and our own strategy and how we trade our strategies. Those are our only advantages right now, and how we control ourselves, that's pretty much all we got in our pockets right now, because these things that are happening are have never happened before. The prices that we've traded to have never been traded before. Um, and the way that we're getting to these prices are they're in a manner that we've never traded before. So don't I'm reiterating this because I don't want you guys to like get to a point where you're questioning your strategy or you're considering like doing something that you normally wouldn't do, and just kind of just take this opportunity to learn more about what you're seeing on the chart versus like really like taking huge trades right now. You thinking, understanding like what I'm saying?
No, I get it because that's exactly how I've been approaching it. I have like
Okay.
I'm not going in and putting huge lot size on,
Yeah,
and
definitely.
because I'm not feeling too confident. Like I'm
Right.
feeling like 70-30, 50
Yeah,
50.
yeah,
So
yeah,
I may see something, but it's not 100% clear.
yeah.
Um,
yeah. And thing is that like everything is working, right? But just after taking us out after that,
Right,
so it's nothing
right.
like means right now. This is my strategy right now. Like I am okay. In morning I do everything analysis, and after that I stick with that. If this will happen, then only I will take it. Otherwise, no.
Mm-hmm.
So
mhm.
at least this is so it is like boosting my confidence. Like I am right, and
Mm-hmm.
means this is not the right time,
Yep,
or today
yep,
is the not my day for trade. Every day
yep,
is not trade day, right? So
yep.
that is also.
You right. It's just not doing it how you want it to.
Yeah,
This
exactly.
is good for me to hear because last week I was back testing and I tried to back test like back to my birthday last year and I was like, I don't think I was very confused at what the market was doing. Like it wasn't any clear like movement that I could see. And I was thinking that maybe I didn't know what I was doing, but this is like reassuring to know that it's going to be times like that because I haven't started trading yet. So
Yeah, yeah. It's definitely this is all new behavior. This is that's the only thing I can say. And like it's some people that's winning really big right now, but it's a lot of people that's losing right now. And this is people who are, I know how to trade. This is people who have a proven strategy that they just not handling the markets well right now. And even the people, and then there's another group of people that are just sitting this out right now, until we get some more clarity before they start taking trades. And another interesting fact is right now, Berkshire Hathaway, which is Warren Buffett's company, they are holding cash at a record high right now. That means that they are not adding a lot of new plays, they're not taking a lot of new investment opportunities right now. They're holding cash, and they're holding cash because of the uncertainty, they don't even know what to do. If and and I won't say this, they don't know what to do, but they don't like the conditions of the market right now. And I'll send y'all the link when they talked about it. Let me find it right quick. I just sent this to Lou. Let me find it. We were just talking about this. Um, Berkshire Hathaway is holding cash at a record high right now. I don't think I can't find the link, but Berkshire Hathaway is sitting on even more cash, 397 billion of it to be exact. This was 4 days ago. Let me look and see if I can find another article. Uh, oops. Let me see if I can find one that we can actually see. Let's see if we can see this chart. Let's try this. Look at this. So this is their cash reserves from 96 to 2025. And their cash reserve on hand as of December 25th. So you can see like they've started going cash late early 2022. They've been holding cash and increasingly holding cash pretty much ever since 2022, but in particularly, we've had a jump in that as well uh, from June up until now, right? Let's go. Let me see another. We can find another article on this. 7 hours ago. And again, this was 7 hours ago that they reported this. Berkshire Hathaway sitting on 400 billion in cash. Wall Street races to fresh heights, leading some observers to think that Warren Buffett founded conglomerate is bracing for trouble. Berkshire Hathaway ended the first quarter with a record cash pile of about 397 billion after continuing to dump stocks. And see, that's another key consideration. They're dumping stocks right now. As we're going higher, they're taking profit right now. And a lot of times when you see long-term investors that start to take profit is because they don't believe in what's going on in the economy right now. And Warren Buffett in particular, he's been an he's been like almost an adversary of Trump lately, uh, because of how he handles his tariffs. One of the things that Warren Buffett said about the tariffs in particular was that, it's an act of financial war, and he came out openly to say this about the tariffs. So he believes that the tariffs are not great for the economy. And it's kind of showing his belief in in the president's decisions about how he's tariffed people and the way those tariffs are being issued. So for him to say something like that and then to go into cash holding, that kind of tells you where he thinks and how he feels about the economy and where we're headed to right now. And for geopolitical reasons, we have war. We've been dealing with war. We've been dealing with tariffs. For them to go in that large of a cash reserve, it is just a sign that they don't believe that we're in the best of situations right now. So um, that's kind of evident in that, with their current cash reserves, that they just don't believe what's going on right now. So Um, so yeah, that's kind of something that you want to take into consideration. Let me drop this link real quick. I'll put it in the chat if you want to take a look at it any further. Let's check. We do have some earnings that came out. Super Micron. We had AMD report. They were up quite big. They're kind of also an additional catalyst as to why the market ran up the way it did, because we had the news, but we also had some good earnings reported on AMD, and that drove the market up as well. We also had Supermicron. They reported and they beat as well. So even with the news about the war, we also had some earnings that we needed to consider as well. We still got going into after hours. We had a couple of not big names, but we had Disney this morning, Uber. Nothing else too big to consider for the rest of the week. But one that we've traded before in options, we had Sound. They were already. I wanted to give a play for Sound, but they actually moved ahead of their earnings. So when I actually looked at the chart on Sound, it was pretty much gone already. So that play, it would have been for long calls, for call to buy calls, but it was literally gone. Just already like 2 days before the earnings, 3 days before earnings on that one. So nothing on that. Then we got, some familiar names like McDonald's, 1-800-Flowers, a couple of what is this, Planet Fitness, and then Friday, not a lot on slate on Friday. So we kind of can take that for what it is. The We also have the Fed chair getting replaced. So Powell is coming out of office, and we have our new Fed chair that has been certified. So we want to kind of. I don't think that they're going to make any sudden moves on the interest rate right now. Um, so it may be a couple days or couple of cycles that we go through before we see any issuance of statements on how the new Fed chair nominee is Kevin Warsh. One of the things that we want to consider about Kevin Warsh is, he's a former member of the Federal Reserve Board of Governors. He served from 2006 to 2011. His policy stance, he's been a critic of the Feds and specifically of Powell recent leadership, like, regarding the inflation management. Powell was very strict on focusing on waiting on and letting the data drive his decisions without taking a lot of risky chances with the interest rate, and focus on certain information and data to make his decision. And he's came out in some past statements kind of harsh on that. And with regard to the interest rate, one thing that we needed to consider as far as Powell's concerned was that we're already at all-time highs in interest rates right now. And we're already seeing the inflation, I'm sorry, not interest rate, but inflation right now. So we're in inflationary periods, and we're also seeing tariffs, we're also seeing war, we're seeing geopolitical issues, and a lot of the way that Powell ran shop was that he wanted to see how the market and the economy responded to these things before making decisions. And he stalled the interest rate because of these the indecision that we've had as of late. So, you know, right now he didn't feel that making changes to the interest rate would be beneficial to the inflation, because if we're already high with inflation and we're lowering the interest rate, the idea is that it's just going to make the inflation even higher. And by doing so, things are going to go up in cost. We're going to have a the value of the dollar will increase, which in turn will ruin some things related to our trade balances. And it will also be an issue for the average person, you know. So it's a lot of reasons why we didn't see the interest rate, and why we're struggling with where we go with the interest rate, because of with all of the effects that'll be around it. Um, he mentioned about ideas on reducing the balance sheet. Uh, he noted that he wanted to reduce the balance sheet carefully, with slow actions described by observers of, and as he interests, he's more dovish, which is like he's more a dovish versus hawkish, and a dovish person is one that wants to see interest rates at a means to kind of drive the economy higher, and lower hawkish is someone who wants to see that the economy is more stabilized and not do a lot with the interest rate. But he has been more dovish of late. And then while he's been approved by the committee, he still requires a full Senate vote to be confirmed. So the what he was, as of April, Wash passed a key Senate Banking Committee vote on 13 to 11. So Powell's actual term will end on May 15th, with some saying that he may stay on just a little longer to kind of help Wash get settled in a bit. So that's the kind of the consensus idea that that's going to happen. But for the most part, the reins will be handed over to Kevin Wash. So anything of late, South Korea top 7,000 for the first time. So we're seeing the Asian markets jump in all-time highs as well. So that's something to consider as well. One thing before we get into the charts, I kind of wanted to just go over a couple of patterns that I've seen that I want you guys to take a look at. These are just some um, chart candlestick patterns that have been playing out, that I've seen this week and of late. So let's share this other screen. So let me get annotation tool. So I want you to notice this pattern right here. You can also see it on the downside right here and right here. You can also see it over here. You can also see it over here. Oops. And it is a pattern we're familiar with, the concept, but it's something that I'm seeing a lot on the charts of late. This, I guess this would be called a hammer in some cases, where we have a in a bullish scenario, we have our order block candle right here, these two down candles. And then we have this single engulfing candle right here that engulfs the move. And we look for the trade to come down to our smaller candle, the last candle we traded through. That particular pattern has kind of been playing out over the past week so far. I'll give you a couple of examples that I noticed this week and how they played out. You can see it on this chart as well. You can see it right here. This on the downside move right here. So, we still had our inverse fair value gap set up right here. And then we had our new fair value gap right here. But in particular, we've come back to this particular candle on this move and sold off from here, right? And in the opposite direction, we've had that same situation happening on the upside. And the only difference is in some cases we've had to have two candles push us back up. Um, and that's a couple of the things like it's been a situation to the downside when we have got a sell off, but in the upside, we've had the same situation, but just in a in the opposite direction. There's another example. So you can take these same setups and I want you just to kind of mark them off throughout this week. Not so much take them, but just notice when they happen, right? Um, Here's another that's the one I already showed you guys. It happened over here on Dow the other day. I didn't take it live, but I demoed it where we had it right here in particular. Here was a multiple candle view of it right here. We had multiple candles right here. We end up coming back to this particular candle right here. And it's in line with our fair value gap order block setup, but it's just reading it to find exactly where we're looking for it to take place once we see those moves happening. So we would have had entries here, we would have had entries here. This in particular did get swept, it got swept, but this is a case where this is where my entry would have been set up from here, knowing that I have this low to use as my stop loss. So this would be the low that I would want it to use as my stop loss. But I also understand that we could be sweeping this low as well. So overall, my entry that I really would have wanted to take would have been here. I would have likely used this as the stop loss overall, and this would have been my overall stop loss. But eventually, I would have wanted to have my stop loss move underneath here. So after we got this wick, let's clear some of this. After we got this wick right here with this entry, I would have set my stop loss based off of this. And on this particular candle that we dropped down into, this would have been my entry confirmation, or this would have been my entry confirmation. And I would take the trade from there with this being my entry and this being my stop loss down here. Again, you can see you just take a look at that on the charts for the rest of this week. I had a couple setups today from that as well. Let me get to let's get to let's get to Dow and just kind of show you guys. So
So mainly you are looking for three candle pattern,
you
swings.
can see it in three, but in particular, I like when when there are just two candles where we have the last up candle and then it immediately gets engulfed and we get our fair value gap and we trade back into it, right? And
Okay.
like in this case, we didn't trade back into it, but if we look at a different time frame, we would have gotten it. It just maybe not on that particular time frame that we got that price to trade back into that particular one. But you also notice that in some cases it's immediately getting traded to, and in other cases it's it's um it's not immediately getting traded to, but we know that it's likely going to come back to that particular area, right? So here's another example. We had the two down candles, the up candles. We missed the coming into the body, but we did come into the wick over here on NQ. You can see it right here. We had the down candle. We had the series of candles to the upside. We came back into the body of it right here. We had the down candle. We had the up candle. There's our order block. There's our fair value gap. Now, we had price coming to the fair value gap, but this is the 5 minute chart. If we go to the 1 minute chart, look, we should probably see one of the same setups over here. So this is that 5 minute range right here. There's the down candles right here, but then here is a lower time frame. Here's the down candles, here's the up move, and then we got the lows right here at that level, right? So you can see that you may see it on one time frame, but it may get used on a different time frame. You just got to come in, find out where you think price is going to move to, find out your levels, and then, of course, always confirm it with using VIX as inverse correlation, because at this particular area, there should have been something on VIX that there should have been a high or a stall price. There should have been a high around these areas on VIX and stall price that line up with this move coming into this area. Okay, that makes sense.
Yeah. Mhm.
Okay. So not so much that I want you to trade this, but I just want you to pick it up on the charts. Okay.
Mhm.
If you feel confident enough to, of course, but just take a look at it on the chart. So we have sold off. We pushed up to this swing high on dollar, and then we sold off for this week. We've tapped into let me check the let me get the charts for dollar real quick from last week, from not last week, but Sunday. So dollar, we expected on Sunday, we gapped down, pushed back up, we pushed up to our one, and we sold off from one. And we went ahead, once we got the sell off from one, we pretty much took out price all the way down to our five on the downside move, which you can see we pretty much came down to our five level right here. And then once we came down to our five, we actually started to bounce from here. So right now we're inside. We pushed off of this new week opening gap from a couple weeks ago, and now we're bouncing off of it as it stands. We are back inside of this bullish fair value gap, and we're trying to decide whether we're gonna go ahead and turn back positive for the week and for the month, because we got this here, and maybe for the year. So we got three pretty strong levels right above us as it stands right now: the yearly, the monthly, and the weekly. And we're actually coming off our daily right now as well. And we're sitting right in the middle of this bullish fair value gap, right? So we'll kind of need to keep an eye on that. The swing high, we got this swing high. I'm not going to annotate that because it's so close to the midpoint of the fair value gap. But we're tightening up our range right now. And then you can see we have our swing high right here. And again, inside of a fair value gap, if we can get inside of that and above that, we see the 0 1 take us at or above this yearly price. There is a gap here. Let me add this one. There is a gap here from yesterday. So we could be coming into this gap because this hadn't been traded into as of yet. So that's one we want to consider as a primary level that we can see price reject from on dollar if we get back up into that range. So our 1 and our 3 are going to be really important levels to consider for the upside, because once we get into here, you can see there's an order block already that we've traded off of, and then you can see that we've made our swing high just above that, and this is our weekly high for the week. And our weekly high could begin taken out if we push up above this on the 2-3 move to the upside. So our weekly high, right? So if we do hold this after we get back into this new week opening gap, new day opening gap, and we hold this yearly, monthly, or even daily, or this midpoint of this fair value gap, we could see the 2 hold to take us above this new day opening gap and take out our weekly high on the 2-3 move, right? And then if we get above that, the 3-4, we get a potential sell off at the 3, and then we could see the 3-4 start off as a new move to the downside. But if not, we hold inside of that range, and the 4-5 takes us even higher. There's a new week opening gap from a couple weeks before, and there's an order block, and there's a fair value gap that's inside of here as well. We could be likely coming to. So this is what I'm going to be looking for dollar, and this is important because this is what we're going to be looking to set up trades for gold. Gold is one that ran this week. Gold moved pretty good this week. I kind of wish I had been paying attention to gold a little more. And another thing that I was going to mention too is like normally I'm looking at ES. I really started paying attention to all of the pairs this week because when it wasn't clear on ES, the setup was a little better on Dow. When it wasn't clear on Dow, it was a little clearer on NQ. So, just a reminder, just kind of, you know, you may not take a trade on it, but just keep an eye on what's happening on the rest of the pairs too, because it's been, again, those kind of days when you might not get the setup on the pair that you want to see it on. You might have to trade in Q, or you might have to trade ES, or you might have to trade YM even. You just gotta take that into consideration as to how we move with it, right? Um, Here is gold. So our projections on gold was either we move up to this previous day high through these highs into this gap and above the quarterly opening price. If we push down, we take this low, we take out this low, and we trade it into this new week opening gap. So let's see what we did. So we kind of did a mixture of both. We did take the downside targets. We set the weekly low inside of this new week opening gap. And then here again, this was Tuesday. We just pushed straight up. Tuesday night on the Wednesday opening, we pushed straight up, right? So this was overnight. Again, not a lot of movement, not a lot of up and down movement, just one directional. And this is ahead of the news release with gold already coming in, pushing higher. So we did the whole downside move, and then we reversed it once we got into this new week opening gap on Monday night, and we really just didn't look back. And that's kind of how all the markets traded this week. There wasn't a lot of up and down movement once we started moving up higher. It was just kind of like chop up higher and just keep chopping up higher and keep taking highs. So what I'm really looking for is if we take out this swing low or the weekly high, which is here, again, also inside of a new week opening gap from a couple weeks before, we traded through it over here, and now we're trading back into it. And the question is this going to hold as resistance, or are we going to use that as a new range of support for this particular new week opening gap? And you can see we got previous week high, previous day high, and then we got another new week opening gap that we've traded into it once over here. This will be, if we can get up in this area again, this will be the first time we traded back into this area. So, that'll bring some initial reaction to that. So what I'll be expecting is our 0 1 take us above this high for the week. And then once we get above this high, we react to this range, and we could see the 1 2 retracement hold, and you can see the 1 2 retracement sell off from here. And if it does sell off, I'll be looking for it to hold back inside of this accumulation and either start a new move to the downside, and then we can start looking at these targets down here, or we hold at the 2 3. If we hold at the 2 3, we'll take out this high and use this range to go higher, where we'll start to look for our 3 to come inside of this weekly opening gap. Same thing as before. We should get a reaction on the 3 to start the 3 4 move. And again, we could get a sell off from here that starts a new move to the downside, and we can look again at these targets. But if not, this range will be support. We use that 4 5 for the 4 5 move to take us higher if we hadn't got into this yet. And we take out the recent highs and set new highs, possibly above this previous week high. If we take the lower move or a combination of the 0 1 takes us below our swing low into the weekly slash and monthly price points, where if we get down here, our 1 2 bounce could happen here. That could be the move to the upside, which in this case is kind of more so what I'm aiming for, because you can already see we haven't had a pullback. So this should be a pullback to kind of either start a new move or get a bounce, or we go into consolidation at some point. So I'm going to be looking for the downside move, because I want to see some kind of pullback after we've had all of this move up. And if we get the pullback, that'll set us up for a continuation or a failure move, right? And we know how to react to it. So if we get the 1 2 retracement, it should push us higher from there. Or if we fail down in or near this quarterly inside of this range, and we sell off on the 2 3 move. The 2 3 takes us at the weekly or monthly, and then we'll make a decision between this not zero, but the 2 3. We'll make a decision somewhere inside of this as to where we bounce. So this 2 3 move may not get all the way down here. It may stall at the weekly or monthly near the 1. So, but for our case, I just added this just to let you know that we could come all the way down here on the 3. And again, this is the same move that I mentioned. There's our order block move to the downside. There's our impulse move above it. There's our fair value gap right here. So we could have a similar move as the one that I just mentioned to you guys. And then also, if we do come down, there's this order block. We could get the bounce for the 3 4 here. And you see, if we get back up on the 3-4, we could react to the weekly/monthly prices and sell off from there for our 4-5 move. And our 4-5 move takes us through that order block, through those fair value gaps down here, and into the previous day low, and possibly take out our weekly low and our new week opening gap. So I hope that makes sense. I hope that makes sense to you guys. I think it does. I'm
Yeah.
pretty sure y'all got it.
Mm-hmm.
So this is gold. Okay, let's go. VIX. VIX has been interesting this week. So we gapped up. We took out our whole. Let me bring that chart up. So on VIX, we had our move to the upside from the closure on Friday to the previous week high. We pretty much did the upside move, and we came back down and taken out some of the um, downside targets. So this is a great example of how, we could take our upside moves and then we could start a new downside move at one of these points, the 1, the 3, or the 5. And I think we started the downside on the 3 in this case. So the 3 was roughly at 19. Our high for the week so far over here was roughly 19. So again, we started here. This was the start of the zero move from Sunday. We gapped up, we sold off, we pushed back up, we sold off again from the 3, and then we sold all the way off, and we started the move to the downside, right? And then if we look at the move to the downside, our 0-1 took out the previous week low. We didn't get the 2. There was another previous week low, and then there was another previous week low near 15. I don't think we took out those yet, though. So we took out 16. We didn't take out this one yet, and we didn't take this one out. So we just took out this low and this low on the upside, and then we bounced off of that. So this was the opening gap right here. We traded into it, we bounced off of it, and then we traded through it, right? We left this gap open. We left this gap open until today. And this was our first time trading back into the new week opening gap after we traded below it. So right now, we're stuck in between our opening gap price right now. So this gap between at 17.38 down to 16.99, we're in between that gap. We got this swing high, and this swing low we need to consider before we, see how it's going to play out. At this particular rate, we got this order block. I want to see us come into. See how we respond. We could have some kind of reaction there. And again, this one in particular is because of the chart pattern. We had our um, bullish candle immediately engulfed. That one stands out to me. So that's the first one I'm going to be looking at. And then after that, we have price coming into the gap that we made on Monday till Tuesday, the Tuesday gap opening. And this will be the first time we come into that. So I want to see how we react to this. So let me actually clean this up a little bit. Because if we do come into this, I think it'll be a little shorter since it's the end of the week. Since we'll be going into the end of the week. I don't know if we get all of this, but we try to anyway. So primarily, right? We'll talk about downside first. If we sell off, we be responding to the weekly and looking to take out this low. We there's a fair value gap right here. We get our 0 1 response from there. Again, last down candle engulfed. We get our there's a order block here that I want to see how we respond to. In particular, this particular order block is the move that started this little trend that we're in right now to the upside. So once we come back down to it, I want to see how we respond. If we get a 0 1 move to this area, we can see our 1 2 start a new move to the upside here. If not, um, we get our 2 sell off, 2 3 sell off inside of the range that we're in right now. And then that could take us to lower to take out this swing low that we just made for the weekly. And this is, let me note this. These are actually equal lows. Let me put this to the right. And previous week lows from from a couple months back. So that's where that particular low is coming from. So this will be an important low if we can take this out, which is just below our weekly low. And then if we get below that, if we don't get a bounce at our 3 4, our 3 4 should get, if we push down, we should take this low. And if we do, we get back into this fair value gap and we try to see if we're going to use that to take us lower. If not, the 4 5 happens. If it does, the 4 5 happens and we push lower into these lows. If not, we see the bounce to get back inside and above this range for us to push higher. For the buy side setup, which is right now higher probability because we closed up near that high. We take out this high, we get inside of this order block, and then we look to see if we're going to immediately respond to this new day opening gap from Tuesday. If we get into that range, we see the 1 attempt to sell off and we get our 1 2 retracement. We could see the new sell off from here. And if we do see the sell off and it holds, we bounce from either inside of here or inside of this order block and we go higher from there. And we get inside, we get above the 1, get inside of this new day opening gap and possibly above this swing high for our 3. Our 3 could start the new move down with the 3 4 retracement. That'll push price back into this range. If we don't continue to sell off, we see the bounce at the 4. We take out the 3, and then we look to take out the weekly high on the 4 5 move. That makes sense?
Yeah,
Okay.
definitely. Mhm.
Okay. This is VIX. So we done VIX, gold, and dollar. And then now we can go into the indices. So first one is Dow. Let's pull your chart up. So Dow has not made an all-time high yet. NASDAQ and S&P have, but Dow hasn't. So of course, we kind of expected to follow through. This was our chart from Sunday. We had price either pushing down to take out these lows or pushing up to take out these highs. We actually pushed down and then pushed up So we pushed down first to take out this low, traded into this fair value gap, this one, and we bounced up from there. So we got one, our we got our 0, 1, we got our 1, 2, and we got our 2, 3, and we bounced on the move up, and then we took out this high, and we were sitting right around this uh, daily bearish fair value gap area. So we got our bounce to the upside from the 3, right? So it's like, just like we mentioned before, like we haven't mapped out, but just how it's happening is very erratic, like we see and we knew to look for buys down here, but it's just really kind of hard to gauge when it's going to happen. So again, this is our weekly opening. We sold off. We got our 0, 1 right here. We had a 1, 2 retracement. You will see it on the lower time frame. Let's go to it over here on the 15 minute. So here's our 0 start. We closed on we closed on Friday here. We pushed up a little bit and we started our 0, 1 move till here. Then we followed that up with a 1, 2 slight retracement here. We made a high here. We got our 2, 3 sell off. It happened here. We took out our 1. We bounced, right? And this is our 3 bounce, right? Inside of the daily fair value gap. But once we got our two, once we got our 2, 3, our 3, 4 just pushed up, you know. Not a lot of clean, not a lot of clean movement. We were just kind of just chopping up higher. And again, like Dow gave us a good setup for the buy, but if you had to try to trade this on ES or NQ, you didn't get this clean of a setup because this drop right here was the one that I mentioned to you guys um, in the chat, in our chat that we have, and I mentioned it to you guys when this Dow buy happened, right? That was the setup that was the cleanest without having to risk too much on the trade. And then even in today, we got the move to just continuing. And then this was our 4 a.m. candle news right here. This was the rest of the day. So it was very erratic, chop into random news, into a lot of indecision and then a bounce higher. So it was not really clean, but you had opportunities at the same time, right? You had the force. Once we got the news, we pushed up near the high of the week, this previous week high, and then we pushed down several hundred points just to push right back up. So it was a lot of back and forth just to get higher. And so um don't worry about these setups. This is just for my notes. So let me get these off of the chart. There is a possibility we could be coming back to the weekly. So again, that's where I'm looking at our 0, 1 to the downside, right? Our 0, 1, we need to consider this low. We'll consider this low. Okay. And our high week is here, which is in line with this previous week high. So those are going to be the levels that we consider as far as the highs and the low for the range. If we sweep this low on the 0, 1 move, we take out this swing low as well into the weekly opening price, which will put us back at the opening of the week. and we could get a bounce here at the one on the 1-2 move. If we get a bounce here, the 1-2 move, this actually could extend down to this fair value gap that was on the daily. So this could go 0-1 to the weekly or all the way down to this fair value gap. If we get the bounce, that could start the continuation higher, the 1-2 move higher. And if not, we fail and we get a 2-3 move to the downside that takes us below the weekly and further back down into this fair value gap and possibly taking out this previous day low. That's where we can see the 3-4 bounce from. If we get the 3-4 bounce, that could be another area that we can see price go higher on the 3-4 bounce. But if we fail, we've already traded through this bullish fair value gap. This will be the next time we came back into it. If it was to fail, it fails at or near the fair value gap or the weekly opening price. And then we see the sell off to take out this low and possibly the low we made here. But again, once we get into that area near the weekly low, we have another fair value gap that we already traded from. So even if we do see price get into that, we could see a bounce from there. So I would keep that in mind. If we just push up on the 0-1 on the upside, that pushes us above these previous week highs and into this fair value gap. Uh, this bearish fair value gap. I think that if we get into this area, we do take the highs and we do like slightly trade above the fair value gap. But once we get above that, we see, a shallow attempt to sell off and we get a price, a 1-2 swing back into the range to either sell off from this range from on the 1-2 move, or we get the 2-3 move higher to take out this previous day high. And if we do so, it kind of makes sense for us to do that because this will be one of the first time we gotten back to this range in quite some time. So if we get to this range, we should definitely see some kind of bearish response. And if we don't, that means we're just going to push up through it and then likely see it respond to it later and we get a move off of it after we've traded higher. So that bounce could happen on the 1-2 or the 3-4. And then once we get to 3-4, we can see like, hey, are we going to use this to keep going down further? Or are we going to hold on the 4-5 move higher to go ahead and take out the all-time high on Dow? Because again, this is the last one. This is the only one that hasn't done it. So this is why I'm saying this is more of a area for this to use to go higher because that's hasn't been used and these sellers are here camping out. And if you want to try to create new buying opportunities, you want to force these people out of this trade and take their positions. So that's the one I'm going to be looking at. That's the area I'm going to be looking at. So this is Dow. Then we have NQ. We got NQ. Uh, I'm not going to go over the chart on this one because it's pretty much the same. But this was our open on Sunday. We sold off a bit into into the monthly opening price. We missed coming into, I take that back. We tapped the high of this fair value gap, and then we just ran up from there. This was the gap. We traded back into the gap, and then we just pushed higher, right? So again, the expectations were for us. I do need to pull this chart up. This was Sunday. Again, we gapped. We traded through the gap. We came into this high of the order block, I mean fair value gap, and we pushed up from there. So our 0 1 didn't quite make it all the way into take out this low, but it did push up inside of this 0 1 move, and then we pushed up higher. Our overall target was 2850. The three was right around 28,300. So far, 28, not 2850, but 28,500. Our 28,300 was right around this level. We got that already. 28,500 was right here, right around here. And we got that level too. So we've exceeded the targets on the upside move already. And now we need to look at the targets that are above that, right? So above, this is our new all-time high right now. Our all-time high is right at 28,800 pretty much. We know if we take out this high, you got 28,900, but I'm thinking right around 29,000 should be where we target on the 0 1. Again, if we go ahead and take the 29,000 and we trade to that, we should get a reaction off of that. That's our first area that we should see a 1-2 retracement possibly. And then we hold near the highs on the 2. The 2 takes us above the 1. We get a 3 likely right around 29,100 to up to 29,200 area on the 3. Once we have taken out the 1, the 3-4 should use the 1 to try to either sell off or go higher. And then our 4-5 move, if it does happen, after we trade above that, we should get to roughly around 29,400 to 29,500 area as a 5. So again, new fresh highs. So we can use quarter points, whole numbers, we can use the fibs, but again, we haven't had a clean pullback, so I don't want to use the fibs on this move because we really haven't had a clean pullback. So the quarter numbers and whole numbers make more sense to me to use this in this case. If we sell off, we have this swing low here and here to use as targets. The 1-2, the 0 1 takes us below this first swing low, which is a lower time frame swing low. We could get a bounce higher there on the 1-2 move. If not, the 2-3 sets up and the 2-3 takes out this low if we hadn't taken it out already. And then we start going into this low. But then the 3 reaches into the daily gap that we had on today. This was the Wednesday gap into Tuesday into Wednesday gap right here that we haven't traded into really. This sets up a potential for us to move, get a bounce off of on the 3-4. If we get the bounce off the 3-4, this could give us the move higher from here. But if not, we fail and the 4 sets up for the 4-5 move to the downside. We trade through this and we get back to this level for the weekly opening price and into the new week opening gap on the 5. So I hope that makes sense. Hope that makes sense. But again, you can see just a lot of straight up and down action. And in this move, from this candle to where we are now, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 14 down candles for all of this upside movement. So these candles have not been as frequent as you normally would see in a move that has gone up this far. You would see some back and forth between um, the bullish and bearish candles, but it's been a lot of one directional trading. So that kind of tells you again like where we're trying to go. It's just the charts almost look just like this. We pretty much just done this. Like we haven't had a lot of downside movement at all. It almost looks like a straight line. So and that just kind of lets you know that it's not in your control right now. Whether you believe what's going on right now should be happening, it don't matter because they just driving it in one direction. So if you're a person like me, like I want to see my setup play out based off of what I want to trade, you're not taking these trades right now. You're waiting for your confirmation before you could take the trades. Because even taking a breakout, you're not getting the clear breakouts, right? You're not getting the clear, clean candle movement. You just seeing it kind of happen randomly. So that's why I was saying, like, if you're looking at a longer term move, then, and you have room to hold these trades, that's a great opportunity. But if you're doing prop firms and you have to be in and out of these trades, you can't hold your trades overnight in some prop firms. So you won't be able to get to hold through this move, which is a better strategy when you see price moving like this versus trying to get in and out of the trades because it's not giving you the in and out movement. It's because it's all one direction. And then finally, let's go S&P. I don't think I marked this one up yet, so we'll have to mark this one up from a fresh perspective. Um, and we had selling off into lower into the fair value gap, into the order block over here. We could get the bounce from here at the 1 or the 3 on NQ on ES. We got it from the 3 and we just been pushing up from the 3. So same thing, on S&P, we pushed to the downside and we made our low inside of this fair value gap right here at the order block, and we've been straight up and down ever since with only a few bearish candles inside of this move. So that again, that just shows you where they're trying to go. Like you can't even do anything about it, right? So if we get a sell-off, we have this swing low to consider, and then this order block and fair value gap. So that's where I'm going to be looking for price to come to for the first move on the 0 to 1. Then our 1, 2 could possibly just hold right below our daily and we get our sell off on the 3, 2, 3 from here. Again, we sweep liquidity. There's a little small fair value gap right here. There's an order block. We see price come down into that range. We could see a bounce from here on the 3. If we see the bounce from here, our 3, 4 has this order block, this fair value gap, this swing low. We see the 4 stall out in that range. And if we do continue to go higher, this is where we're going to go higher from. If not, the 4 fails and we take out this 3, this swing low, this daily low from today, and we're back inside of this weekly, this daily opening gap, or we go ahead and trade back to the weekly opening price and into the daily the weekly opening gap. So that's our downside move. Let me extend this out. What do we got right here? This is 240, 345. We need this over here. And then this was our daily low. We need you. And then we got a small swing low here. This is a swing low right here. So that's our downside move, right? Let's change the color on you. Probability says we bounce from here. Actually, I like the one since we ain't been really selling off too hard. I like the one for the move here. Then upside, right? We made a new all-time high, right? So because we made a new all-time high, we have to take the same approach, right? So what are our next quarter points, right? So right now, this high was made at 73.95.75, right? So right above this, we have 7,400, right? The first quarter point we're going to get into around 7,400 is 74.25, right? That's pretty much, I don't even have to change this. 74, this one pretty much puts us right around that. If we take out this high, the 0 1 takes us right around 74.25 area. So that's going to be our first target above, right? If we get above that, right, we trade back into the range that we're in right now. And then our 1 2 sells off from there, or we hold near or at this new all-time high, right around the 7,400 area. And then the 2 3 takes us even higher. The next quarter point is 7,450 area, right? 7,450 is right around where we should see the 3. And we should be coming back to or around the 74.25 area if we get a retracement on the 3 4. The 3 4 move takes us at or around these highs, right? This should start a sell-off if we want to get one on the 3 4, or we hold near those highs we made at the 1, and then the 4 5 move takes us roughly around 74 74.75 or the 74.90 area. I like 74.90 area on ES. You know, I love the 90 price points. So I like the 74.90 price point on ES. ES loves the 90s for some reason.
Or is
And
it that it's
then
just constantly it hits that mark and then it reverse?
always, or something
Okay.
always happen at 90 for some reason. Um, you can back test this for days, weeks, and years, and you'll see um, ES always responds to a 90 point.
Okay.
Oh my God. Oh my God. So here's ES. And that's our last one for today. And then the rest of the session, I'll open up for Q&A, and then I'll get this session ready for dropping on YouTube so y'all can watch this later if y'all want. Any
Yeah,
questions?
so one question.
Sure.
So like today, can I share my screen? Then it will
Sure.
make.
Let me stop my share. Oh, y'all can see me the whole time. Dang, I'm looking crazy. I
It's
ain't
all
know
right.
y'all
It's like
could see
what,
me.
6, 7? How long? What is it? 7 o'clock there? No.
It's
Yes.
11 a.m.
Because 9 here. Yeah. Okay.
Yeah. Let me turn my camera off. I ain't know y'all could see.
So it's like
It's too
today.
late now, bro. We done saw
All
you.
right, it is too late. It is too late. I'm glad I wasn't doing nothing crazy. You should be able to share, but let me
No,
just
it's
double check.
sharing is not turned on.
Oh, okay. Hold on. Let
I can send
me,
you first.
okay. How about now?
Yeah, it is. Yeah. So like question is on SMT.
Mm-hmm.
So like today I saw this, right?
Mm-hmm.
In MNQ and in SNP I saw this, right? So when I see this kind of thing like this didn't this took this low, right? This low.
Mm-hmm.
So it
Mm-hmm.
means it's not ready to go, and this didn't. It means it's ready to go, right?
Mm-hmm.
Okay. So I was expecting, right? This is London FVG, so it will come and tap this, and then it will go, right? So
Mm-hmm.
like that time I was not means two things were conflicting, so I thought to clear this. So because this is ready to go, right? One thing ready to go, and because didn't tap this London FVG, so can't means I am expecting again to come back and hit that and then go up at 9:30 or between 9:30 to 10,
Mm-hmm.
right? So like two things are together, like it may go, it may not go. So what will you prefer in this case? Like I was expecting same thing in MNQ, so it did here, right? So I was okay, and because this was the 1 minute, if I'll turn this 1 minute.
My a
So this
easy
was the
answer,
taking, sorry.
a easy answer to this is
Mm-hmm.
okay. Once you notice the two are not in sync, right?
Mm-hmm.
What is VIX telling you? Where's VIX at?
This is in different one. Let's see
Yeah.
that. Mm-hmm.
So what is VIX telling you at the same time you enter into that range? So you got NQ, you got ES.
Mm-hmm.
NQ is telling you one thing, and ES telling you another. What is
Mm-hmm.
VIX telling you to do at the same time frame?
It's going, VIX is going down here and that
VIX
retracing
going
that
down,
move, right?
right?
Mm-hmm.
So that kind of tells you, okay, this may not come into this range like we thought. If VIX is doing this, this has come into the range, and we're not seeing price want to go down into this range
Mm-hmm.
on ES, then we probably not going to come into that. And we just going to hold here on in Q. Hang on.
Like this is the part sometime I am not very clear on this.
Yeah.
Like uh r- like right now I have to make group, right? Means VIX and S&P is doing same thing. So
Mm-hmm.
I can trust on NQ. Is
Mm-hmm.
it like that?
Mm-hmm.
Okay. In
And
some
this
case,
just
mm-hmm,
this kind of go into what I was saying earlier.
mm-hmm,
Which setup is doing what you expected it to do?
MNQ.
That's the one you take.
Yeah. Okay.
That's the one you take. If and if can you add Dow? Jones on this too,
Mm-hmm.
just real quick, and do a four.
This
Um,
one. Oh, this
yep.
is for. One. Mm,
And then let's get those lined up too,
mm,
this same time frame.
mm.
Just close, hit this button right here.
This is in
Hit this button right here.
which one? This one. Okay. So this is MNQ, right?
Hit this button and to close the watch list.
Oh, okay, okay. Close the watch list. Okay, this button. You don't
Yeah,
want to see that. I
yeah,
want to
yeah,
make a DAO here, right? Both are S&P.
yeah.
So this is
Um,
MNQ. Hold on. I'll do this. Actually, I don't think I have this.
Click right, click over here, and then click on this.
Yeah, yeah. Good, good now.
Yeah, so we got S&P here, we
Yeah.
got Dow over here, we got NQ over here, and we got VIX over here. Okay. All right. So find that same candle
Mm-hmm.
on each one of those, the 4 a.m. candle.
So, if I say like this is the one,
The 4 a.m. candle.
4 a.m. Okay, okay. This one.
That's the fair value gap.
Mm-hmm.
Right? Let's
Yeah.
find it on each one. That's on. Yep, you can go ahead and add that too, because that's the gap on VIX at 4 a.m. That gap is to the downside
Mm-hmm.
because that's important too.
Yeah. Mm-hmm.
Okay. So this pretty much is the question is you're expecting to have price return into this fair value gap, right?
Right, right.
You're also seeing that there's three things that took place, right? There's the fair
Mm-hmm.
value gap here, here, and here. And at the same time, on the fair value gap, we have the gap to the downside on VIX, right?
Yeah.
So we
Yeah.
got gap, we got gap, we got FVG,
Yeah. So that's
we got FVG, we got FVG. And you, as a trader, are
mm-hmm.
expecting that one of these three pairs, one, two, or three, is going to come into the fair value gap.
Mm-hmm.
And one, two, or three is going to come into the fair value gap the same time four comes into the gap, the price gap.
Yeah. Yeah.
So which one does that?
MNQ.
MNQ. Check, right? So
Mm-hmm.
if I'm expecting that one of these is going to come into the fair value gap, I can take the approach of trading that one with the most confidence, right? Can I
Yeah.
trade the other ones? I absolutely can. But the one that
Yeah,
did what I
can.
wanted it to do
Mhm.
is this one.
Yeah.
Could I trade two or three? Absolutely. But
Yeah, I can do two. Yeah.
they
Not
didn't
two,
do
it
what I
means
wanted
three.
it to do.
Mm-hmm.
I like this. I'm gonna screenshot this. I like this example.
Do you want me to send a screenshot?
I want all my little markings on it too. So I'm gonna I got it. I'm gonna screenshot it from my screen.
Okay.
We do it one more time. Okay. So again, if I'm looking at this, my expectation is they should be coming into the fair value gap that was created on the news, right? The news
Mm-hmm.
at 4 a.m. created a gap to the downside on VIX, and it created a fair value gap on the rest of the indices, right?
Mm-hmm.
I know that because we did that, we should come into it. So
Mm-hmm.
we come into it over here, and at the same time, we coming into the gap over here on VIX. We should get a reaction.
Mm-hmm.
We don't come into it over here.
Mm-hmm.
We don't come into it over here. Can I still trade ES and Dow? Absolutely. But
Yeah.
I need to just watch. At that point, if I don't trade Dow, if I don't trade NQ, I just
Mm-hmm.
use NQ as a confirmation to take two and three.
Yeah, on basis of that, I can do that S&P
Mm-hmm.
because they did that and VIX is doing that. That's
Mm-hmm.
why means yeah, on dependent of that. If NQ is doing that, then I can do S&P like that.
Yep.
Mm-hmm.
Yep. Or you can just take NQ and it's already doing what you wanted it to do. So I'm
Mm-hmm.
just going to take NQ and say, hey, NQ is the leader today. I'm going to do what NQ is doing, you
Yeah.
know? Or
Mm-hmm.
if you don't take it, you say to yourself, hey, one, NQ has already accepted this FVG and we're already moving away from it, which means we likely won't come into this range. So I can trade it where it is as long as I get confirmation from candlestick patterns that this area right here is the area that I should be using.
Mm-hmm.
That's it.
Okay. Okay.
That's the
Yeah,
best
so
way
means
to look
I
at
did
it.
same thing. Like I was because not sure about that, so I thought it's better to wait for that, and I because I saw that clear setup in MNQ.
Mm-hmm.
Mm,
Mm-hmm.
mm.
Yeah,
Okay. Yeah, thank you.
no
It
problem.
was clear now. Mm-hmm.
No problem. I guess that's it. I like that last discussion. So I'm gonna definitely um just keep reminding y'all this.
Mm-hmm.
So all right. I'll drop all the charts and I will post the video on YouTube and I'll drop the link in the group
Okay, thank you. And next session is when?
Sunday.
Sunday.
Mhm. Mine evening. Okay. Okay.
It'll be
Thank
Monday
you.
morning for me, but Sunday for you guys. Yeah.
Yeah, yeah. Actually, I thought you said something like I'll do Thursday live session. So I thought it will be tomorrow. So I was not ready for today.
Nah, it's Thursday for me.
It's Thursday for him because he's
Yeah.
ahead.
Oh,
Yeah, it's
oh,
Thursday
okay,
morning.
okay.
Yeah.
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 Yeah. So I
What I
had to do
was
some
saying
reading.
is
I got you,
Mm.
Anna. I ain't see you on.
Mm.
I was like, let me text her.
Yeah, thank you so much, Tess.
what I was saying last week was that I may switch the Wednesday session to a day trading session where we trade together on Wednesday morning. So I just don't know if anybody can make it other than you, Anna, because Treese, she'll be at work. So I don't know if it's beneficial.
Mhm.
You'll love it, I know.
Yeah.
But you'll be the only
Yeah.
one on there with me.
I could
Yeah.
probably be on, but I would have to like if you just be in my ear. Um,
Yeah,
yeah.
yeah. So I was thinking to replace this session with that one. So I don't know.
Oh.
Yeah, I don't know if I want to do that yet. So
So
I'm
means
just
if
leave it alone.
you have that plan, then means I can think of that. Means again, Triss and whoever is coming is definitely they need to make that change,
Of course.
schedule change. Mm-hmm.
Yeah. I'll keep y'all posted though.
Okay, okay.
I'll keep y'all posted. I would if I'm gonna do live trading, I gotta have more people on. Got to. I love y'all to death, but
Mm-hmm.
live trading, I don't wanna and I gotta I don't even know if I would even do it then because I think I would have to I would probably have to start charging for that. Like that's
Okay.
too much on
Mm-hmm.
me at this point to do that. So,
Right, right.
As
'cause,
you should.
yeah,
Yeah.
so
So you are doing that London also or no? Because now you have enough time to do that.
I have been looking at London. I have been looking
Okay.
at it, but not so much because let me go ahead and stop the meeting.
Mm-hmm.
Where is it? Record, stop recording.